based off what ICT teaches, right? I'm looking at institutional market structure right here, right? I'm looking at institutional market structure where we came down after running sell side, hitting this this new week gap open, right? Then we pushed back up and we came back down and we formed the swing low right here, right? Pushed back up into this fair value gap where we had an institutional order flow entry drill and sold off, created a swing low there, and then we got the pang out to the downside. When we got the pang out to the downside, we came down here below the new week gap, came down here. We just gonna say roughly the consequent encroachment on this wick. I think we might have hit like consequent encroachment on like a daily wick or something. I can't remember. I don't have it there no more, but we hit something. Then we got to pang out to the upside where we broke market structure there, right? So boom, breaking market structure there, right? With the swing low. Then we came back over here and we formed another swing low where we got to pang out to the upside again. So boom, now that we got, you know what I'm saying, a swing low here, right? A swing low there, breaking market structure, a swing low there, breaking market structure there. Now I'm looking at the institutional order flow. I'm like, hey, this is just like what happened last time where we have a low with a higher low and a higher low to the left and right. So we got an overall swing low with this area right here made up of all this price action, right? So boom, what did I see Tizzle do in the last instance of this right here? He grabbed the Fibonacci's, came to the far right swing low point, got that low, and went back to the previous high, right? From the price leg of this swing low, right? From the previous high to the price leg of this swing low. Let me set up my my TLR projections. Boom. You hit them with the TLR projections, right? What's the deviation above the equal highs, right? The deviation above the equal highs is 41, 77, 75, right? That's where I get that liquidity run projection above the equal highs. That's where I get that from, right? That's based off of the far right half of the far right low of the overall swing low, right? The right price leg, if you will. Like, you know what I'm saying? The people that look at mannequin body parts, this is what they call it, inverted head and shoulders. Or is it head? Yeah, inverted, because the head down here. Pause, right? Shoulder, head, shoulder, inverted head and shoulders. That's what the people who look at mannequin parts call it, right? So, and then what's the I ignored this, what's the name here? Oh, there it is right there. I ignored this right here because I was focusing on that. And plus, with the projection on that side, look, it's above the weekly high right there, right? So there you go. And then I just noticed that, tell you the truth, I was ignoring that high. I ain't gonna hold you. The deviation above the weekly high is 3190, right? The deviation above the weekly high is 30. Hold on, going on here is 3191.75. 3191.75. That's the deviate from this high right here, right? I got them lined up. I line them up with the high that I'm using, right? That's how I keep some sense to it, right? The deviation that's above the weekly high. Now, where this is, I call it 2, right? I call it's a equal high target 2 and weekly buy side liquidity purge 2. I call it 2 because it's the second half of the swing. It's the second part, right? What's the first part? The first part is the low of the swing low. The low of the swing low back to the previous high, back to this leg of this swing low right here, back to the swing high. So what's the deviation above the equal highs? The deviation above the equal highs from the low is 4172.50, right? What's the deviation above the, God dog it, I clicked on the, see, this is why I wanted to do it on the other one, because I keep clicking on that. What's the deviation above the weekly high, right? Where's the weekly high? Is this that's the weekly high right there. Okay, the deviation above the weekly high for this one here is the get myself together. Right there, 41. Oh yeah. Why did my wick move? Did my wick move? Because last night when I did that, it was right on 41.90. It was right on 41.90 last night when I did that. And now it's on 41.91.13. Some adjusted something. But that's where I got that from, the 41.90, right? Because even if I changed that up. Oh, that's where I get, that's the 41.90. I had it on the wrong thing there. It say 41.90 because I connected it on that green candle instead of the low, right? So that should say 41.91 25, right? That should say 41.91 25 because I connected it on the wrong thing right there. That's what happened. I messed that up. But that's how and why I got those projections. And right now price went up into here. Let's see if price is respecting anything. We already checked that swing over there. Yes, we checked that swing over here. Yes, that's the first swing we use. Load projections. Y'all bear with me for a second. I'm checking some. All right. Got another ping out over here coming off of this. See if price respect anything now. Okay, so coming off of the ping out on the 5-minute right here on the 5-minute chart, after we took out this buy side and respected this new week opening gap, that's from the 12th. That's this week. So this is this week's new week opening gap. And from respecting this new week opening gap with the ping out right there, so this is the projections that I was using for yesterday. When I was going through testing like different things, and I was like, I got the what's name to the tick and all of that right there. If you look, it looked kind of sloppy doppy right here, but you have the, let me go back to the hourly candles so it'll look less crazy. All right, so if I go back to the hourly candles right here, no, the market not open yet, right? Come here, the deviation above this high, right? Coming from what we respected on the 5-minute, what we respected that we had that swing low, where we were after taking out this buy side, we respected the weekly opening, new week opening gap, and got the ping out, right? Run the fibs on there, and the deviation above this high is at 41.8250. That would have been the spot that I would have been looking for above that high right there if I was monitoring that high, right? I would have been, and as you see, the market went up. It went up above it a little bit, and then it reversed down. And my use case for these projections would be if I was in, like, just say if I went long down here and my target was getting back up here to this high. You know what I'm saying? I use this to project in the direction that I'm looking to run the buy side. So if I get long down here and my target is, just say my ultimate target is to get all the way back up above this high over here, right? That's my ultimate target, right? Getting long here, that's my ultimate target, right? My purpose for these projections up here, these would be the points. Okay, it's buy side there. When do I want to shave or close my position, right? Okay, give me a concrete spot. Don't just say if we get to this point. I'm trying to get away from that. I'm trying to get to using concrete numbers. I'm saying I'm on my ICT journey right now. I'm trying to get the concrete numbers. So if my ultimate target over here, I'm projecting based off of the institutional market structure, right? I go long here, wherever in this price leg, right? So based off of, I've went long from down here, and based off the market structure from down here, I'm shaving at 41.7250. Why? Because that's based off of when I ran these fibs, that was a price point above these equal highs. I'm shaving there, right? Then based off of another price projection from down here, right? I may shave at 41.7775 because I think this high may present a problem, might reject me down. So boom, I'm gonna shave something there, right? And then if that don't reject me down, I'm gonna shave a little bit more at 41.8250, right? I'm gonna shave a little bit more there, right? Because based off of this projection over here, just see if I got long over here during this time, but based off wherever it was, right over here, if I got long over here based off this time, right? Based off my projection, that I'm shaving some there because we may not make it to that high, right? If that high don't take us out and we keep going, I ain't got stopped out, my trailing stop ain't got hit, we get above the buy side liquidity for the week, I'm shaving a little bit at this. I got 41.90. It should be 41.9125, right? It should be 41.9125. Let me fix that right now, right? Because I had it on the wrong low. I had it on the wrong low, so it should be 41.9125. Dollar pause for anybody that caused any confusion for. If you was trying to run the fibs on your own charts and like, man, how Tim get that and then how these two right here are so close together. Oh, that's giving me a whole lot of strength about that area right there, because we got two different projection areas, this leg and this leg projecting almost the exact same spot, right? And then as you go up, and you just go up, okay, these are different spots where, okay, I want to shave. That's the point of these right here. Or it can be your ultimate target. Like you go long down here and this high is your target, right? If you don't get out right at the high, you definitely would be like, okay, I'm closing right there at 41.7225. That's where I'm closing. If it keep going up, so be it. But that's the way I intended on implementing this. This is my concrete target. You know what I'm saying? Just like when people be like, how far up do you think it can go? Right? Looking at the daily chart right now. Right? Looking at the daily chart right now. Right? How far up, if this bull run is to attack the August highs, right? This is the August high right over here, right? This is the August high right over here. The August high is 43.7825. If somebody asks me right now today, Tim, if the bull market, if this bull rally keep going and do attack them August highs, what's your price point? My price point is 44.0850, right? Why is that your price point? Because if I come over here, right, and run, get my fib, see, I got this where it stop at there. That means I ran it to that high. So from this piece of the price leg up to that high right there, put out my extension, my projections, load, TLR projections, boop, get on the right candle, Tim. That's what happened last night. You see how I just put on the right candle, and when I click back on it, it jumped to the wrong candle, right? So based on this piece of the price leg, like these are daily candles. When we came down, right, we had a swing low here, we had a swing low there, and we had a swing low there, right? So I made projections based off of all these, and then we came over here again, right, respected this order block and got another pang out, and so I did projections from this one right here too. So my projections from this one right here, the deviation that's above the August highs is at 44.0850. Right there. That's why That's my target if we continue up on this bullish run to attack them August highs. That's my target right there, 44.0850. And that's why. That's my target. And if I come back to the legs like before, the second half of the swing low down here, right? The target that would be above there would be 44.21.25, right? That'll be the deviation that's above the August highs, right? And if we go all the way to the bottom swing low, right? The deviation that's above the August highs will be 44.89 even, right? But the reason why I just went with this one, because this one here gave me, right, the closest one above it, right? That's my target right now. Boop. That's it. That's it. That's why, and that's how I project it.